Hi, welcome everyone to Single Audit Common Compliance Challenges. It's a mouthful. An Auditor's Insight. This is episode 2 of season 2 of our Grants Management podcast series. I always enjoy tackling the topic of single audits because one, it's very highly requested. And two, so many organizations do not have the understanding or the experience on what it really takes to get a clean single audit. Preparing for a single audit is never easy, and dealing with findings and corrective action plans can also be really stressful. So I am Kat Kizior. I am a Grants Lifecycle Solutions Manager at Bekaert. I am also a certified Grants Management Specialist, and I have over 25 years of experience in the grants and accounting field. Paula.
Hello, I'm Paula Heller. I'm also a consultant at Bekaert. I'm a Grant Management Solution Lead, a Grant Compliance Expert, CGMS like Kat is, and I have same experience as Kat, 25 years in grants and accounting.
Yes, two very highly knowledgeable grant nerds right here at your service. So, in order to bring you top-notch single audit information, we have asked Bekaert's own Zach LeMorta to join us today. Thanks so much for coming today, Zach. Can you please tell everyone a little bit about yourself?
Of course. Nice to be here. I'm Zach LeMorta. I'm an audit manager at Bekaert. I'm a CPA, been with the firm for closing in on 6 years now, and for the most part, I've been with the public sector working, through the audits over my time, and that includes various single audits for a lot of local governments in the area. So, very happy to be here and talk a little bit about single audits.
Thanks, Zach. We're excited to have you on. I know you and Kat also did a presentation at NGMA, their annual grants training 2025, and the room was packed. So we know this is clearly a high demand topic. So let's start out with a couple of questions to set the foundation of this conversation. What exactly is a single audit, and how is it different from a financial audit?
That's a great question. And I think the easiest way to explain the difference between the single audits and a financial statement audit, and even just understanding single audits, is talking through those differences and how they differ from one another. So to start, single audits mainly just focus on the federal funds that are expended by an entity. So it could be government, not-for-profit, whoever it might be. And we come in as auditors and test those expenditures and make sure they're following all the various requirements that are out there set by the federal government for whatever program or funds that are being used by the entity. And usually all of those funds get rolled up into the Schedule of Expenditures of Federal Awards, or the SEFA, which accountants love their acronyms. So you'll probably hear a few throughout this podcast. I wouldn't be surprised. And all of our work as auditors surround that SEFA. We're making sure that we're at least getting some comfort over the numbers that are within there, the expenditures that are reported within, and making sure that they're following the various requirements they need to be, and all the controls that are in place surrounding the federal award. So that's really the focus on single audit. It differs pretty much from the financial statement audit a decent bit. The financial statement side, that focuses strictly on that annual comprehensive financial report, or the ACFR. So another great acronym. And we focus mainly on the balances within those. So the assets, liabilities, revenues, et cetera, all the various disclosures and schedules that are within. Those are all the main focuses of the financial statement audit. So at a whole, it's much more broad than it would be for a single audit when you're just kind of comparing apples to apples. Of course, when you dig in a bit more to the single audit, there's definitely much more than meets the eye there. But a lot of it, it is much more of a broader work when it comes to the financial statement audit as compared to single audit. There's also a difference in the threshold for when you need one or the other. The financial statement audit, as probably many people know, you get basically yearly. You get your ACFR audited yearly. I'll call that more of a timing threshold as compared to anything. The single audit is more of a quantitative threshold. So to require to get a single audit, you need to have more than $1 million worth of federal funds expended during the year. That's up from what it used to be, which is around $750,000. So it went up to $1 million not too long ago. But if you have above that threshold in federal funds expended, then you're kind of subject to the single audit requirements. And if you're below that, you are not technically subject to those requirements. So that's another key difference there, is kind of when and how you need a single audit. And then finally, kind of at a very more detailed level, which I'm sure we'll talk about at some point, the focus of a single audit in general is much more control and compliance based when it comes to the work that's performed. We're really tuning in on the controls that an entity has, the various compliance requirements that an entity needs to follow for their various federal programs, where on the financial statement side, that's a bit of a part of it. We're maybe testing a few controls here and there throughout a financial statement audit. We're looking at some compliance, but it's usually on the state side. So it's not really the only focus. It's much more broad in that case. So the single audit, though, very focused in on the controls and compliance testing. So those are some of the major differences. I'm sure there's also plenty of others too, but hopefully that sets a solid foundation as to kind of what a single audit is and set up our conversation pretty well today.
So I hear the term yellow book audit and single audit. What is the difference between those two types of audits?
So the yellow book audit, you can kind of view that as your financial statement audit. It's kind of the set of rules that we follow when we're going through our financial statement audit. It's called the yellow book. It's basically just a huge guide for us auditors. It's kind of what we need to do during the audit over an ACFR, usually centered mostly on governments, not-for-profits, those like kind of public sector type entities, and it kind of drives how we do the audit for those. Whereas the single audit, that is purely just based on federal programs, any federal funding, federal funds expended. That is the only focus of the single audit is those federal funds. So that'll probably be the key difference between those two.
Thanks so much for clarifying that.
Yeah, and I think the addition to that is that the yellow book is used for the ACFRA, but with the single audit, we're using the 2 CFR 200 compliance supplement, which is produced in May generally every year and really becomes the testing checklist for the audit. Would that be true, Zach?
For sure. That compliance supplement tells you everything you need to know about every single federal program basically that's out there. It's like 1,000 pages long. So it's a good way to fall asleep if you need something to read at the time. There's a lot to go through, but it gives you everything you need to know, from auditor procedures to requirements that you need to follow as an entity for every single program that you might have out there. So it's definitely a good go-to to be able to kind of understand how a single audit needs to work.
And I think there's a little history factoid we could add that enriches this conversation. Historically, there's 26 federal agencies, and they could all audit the programs that were being administered by grant recipients. But the single audit was the solution, where we're taking those grants and slicing them and doing just one thing to reduce duplication of effort, which I think is a fabulous achievement. So now that we know kind of historically how the single audit came to be, Zach, what role does the auditor play in a single audit? So what is your overall objective and goal when you're performing an audit on a client?
Oh, wait, hold on. Before we go forward, I have a brilliant idea to help keep this really flow. So let's set up a scenario. If you listen to our podcast, you know about Kiwi County. Kiwi County is our representative county that is always a grants mess. But Kiwi County has all these grants management issues. And they have over $1 million in federal grant expenditures this year, let's say. And they've never had a single audit before. So how do they go about preparing for an audit, or a single audit specifically?
That's a great. Single audits are tough. There's no way beating around the bush on that one. There's a lot that goes into a single audit, especially if it's one of the first ones that you're experiencing as an entity and even as a person. Kind of going through a single audit, it can be a lot of moving pieces, a lot of support that we end up requesting throughout. I know as an auditor, we ask for a ton when we go through the process, so we get it. There's a lot that kind of moves on during that process. So there's a few ways to kind of get prepared and kind of get in the right mindset when leading up to a single audit, especially for your first time. I think the best way, and what I would recommend to almost anyone, is just communication. Talking with your auditor, talking with your internal team, setting expectations on, what do they plan on doing? What should you expect from the entity side based on what the auditor is saying and what they plan on performing? What are the deadlines involved? What are the due dates for when things are going to be needed from the entity, when things are going to be back from the auditor, if they're doing any testing, sample selections, whatever it might be, what sort of support they might be looking for, and a whole bunch of other items that you can kind of start talking about early on to at least get an idea of what to expect. You might not be able to settle everything right away, but you'll at least be able to have an idea of what to expect when things are coming through. And if you can set a solid timeline of events and kind of talk through how best to get to a specific deadline, whatever that ends up being, then it makes it way easier to at least keep track of everything, make sure that things are still moving in line, and nothing's kind of falling off the wagon, so to say, which is probably one of the easiest fail points in a single audit, is that one thing starts to get delayed, and the next thing starts getting delayed, and then it all kind of snowballs to where now deadlines are getting missed and nothing fun's happening with that. So definitely setting those expectations early on and creating what I like to call like the audit work plan helps a ton. Not many entities do it, surprisingly. I know a lot that I work with that don't, but there's also a few that do kind of finalize that audit work plan. And for those that take the time to do that, it makes a much simpler process because everyone's aware, everyone's on the same page, everyone's accountable to what needs to be done. So it makes it much easier for everyone to communicate and kind of get an understanding of where to be. So I would say that's the number one easiest way to prep for a single audit, is just communicating with the people that are going to be involved. The next one I would say is just making sure you are aware that there's going to be a lot of information requested. It's a weird one. It's not really something that you can kind of set up for physically in that sense, but just kind of mentally getting prepared for the fact that there's going to be a lot of requests on, the various expenditures that happen throughout the year, various reports for the programs that you might have to submit, contracts that you procured throughout the year. We're going to be requesting as auditors a ton of that information. And the easiest way to kind of get prepared for that is having it accessible to you. You might not know right away what exactly you're going to be requested from, like for, exactly what invoice is going to be selected, or and there's a specific payroll period that they might look at. You're not going to know that right away, but you can at least know where to find that information. So when that request does come in, you can easily go to that spot, be it a file, a hard drive, whatever it is, go and pull that information for them and hopefully keep the process moving pretty efficiently. So just being aware that that information's out there, being aware of where that is will help you a ton when those requests kind of start rolling in, because they do roll in pretty fast. And the final probably recommendation I would have when trying to set up and get prepared for a single audit would be just knowing your controls within the entity, right? Making sure that you know what sort of levels of review you all perform under a program over federal funds, knowing the various reports that need to be submitted and things of that nature. Just so I know very early on, the auditors always ask what the internal control processes are for each program that they end up testing. So being able to articulate that, kind of talk through what those processes are, who does what, who reviews what, who prepares what, it kind of sets everyone up to be able to start selecting what are some of the controls that we're going to test, what are some of the areas that we're going to look at, and it just makes it a bit easier when you're kind of preparing for the actual testing, both from the entity and the auditor side. So there's a few ways that you can do that, and I know Paula, you had mentioned it not too long ago, but the compliance supplement, that is a go-to when you're trying to prepare for a single audit. You can always find your federal program within there and try to find out what are the requirements that you need to follow for a program, get an understanding of that. Helps with knowledge a little bit as well. So as you kind of go from year to year and you start seeing the, same programs you might be using federal funds for, you get a better and better idea of kind of what you're going to expect during the audit, what you need to be doing with those funds based on those requirements in the supplement. So there's a few ways to get prepared. It's a tough experience for sure, especially the first time around. There's going to be a lot moving going on, but if you communicate well, talk through, kind of learn a little bit about the controls and compliance, you'll be set up well for success.
That's a great answer and some really, really great tips. And I think, essentially, this should all begin at the beginning. The minute you get an award, you should be thinking about how it's going to show up in the audit. Thinking about that timeline, what's your supporting documentation for your expenses, what controls are in place for monitoring. And so if you begin with that audit end in mind, I think you're in a better position. But unfortunately, County, they have weak controls and a new grant staff. What kind of processes can we advise them on, Kiwi County to use or implement to help ensure they have a minimal to no findings?
It's a great question. That's what everyone wants during a single audit is no findings, as many little findings as possible.
Exactly.
It's always the goal for the single audit. And there's a few ways to hopefully kind of at the start of it, be preemptive and hopefully, implement certain things that can help prevent any findings that come out during even your first single audit experience. So I have a few, but the main one, I think, and probably one of the more important ones, is just getting levels of review on the various documents that come up during a federal program. There's always either quarterly or annual reports, invoices that you're using to purchase, that you're using funds for, to that you're expending throughout the year, timesheets for payroll for people who are under that specific program that are getting paid. All those items, you'd always want to try to have someone that is reviewing that's separate from whoever is preparing it. So for a timesheet, maybe, of course, the employee is probably filling that out, but then you have their supervisor behind them reviewing it. For an invoice, maybe the purchasing department is setting that up, but maybe the director of finance or someone like that is reviewing it afterwards to make sure that the amount looks right, the funds are being used properly for the program, et cetera. So I like to say the more eyes that you can get on something, the less findings you're likely to have, just because it's easier to catch something that might be off with multiple people looking at it behind you. Of course, that comes with its own challenges. Of course, you need to kind of analyze the cost and benefit analysis of that. Not everyone has a huge accounting department in their entity. Not everyone has 5 or 6 people that could go look at something, nor would that always be efficient or effective for everyone. So it's just trying to work with what you have, based on either personnel or whatever it might be, whatever restrictions that might be out there, but at least trying to have someone who is a bit knowledgeable on the programs, a bit knowledgeable about the federal funds, maybe someone who reviewed the compliance supplement or something like that, to at least review some of these items, just so you can be able to catch anything that might occur that would come up during the audit, where we're reviewing an invoice and we see something that maybe shouldn't have been included under the program that might have been caught if someone else looked at it earlier. So that's probably the number one way to be able to help minimize those findings, is just having those levels of review. In line with that, and surprisingly one that presents a lot of issues sometimes, depending on how it all works, but actually documenting that review is a big piece too, to help minimize the findings. It's one thing to actually do the review, and that's fantastic. That's what you want to do, is actually perform the review over all the various items you need to, but you also need to find a way to document that, to be able to show the auditor when they come in that, yeah, it's not just words that we're saying that we're performing this review. Here's how we're actually doing it. Maybe it's a signature on an invoice or a system approval for a timesheet, a signed contract, many different things that could constitute a review, but you want to be able to have that documented somewhere. It's very common for that documentation to fall through, and when an auditor comes through and requests to see, like, hey, we know you expended these funds for a certain invoice. Can we see who approved that before the funds went out? And for that program. And it's kind of hard sometimes where people don't hold that information. They don't have a signed invoice. It's more informal. They might just walk over to someone's desk and say, oh yeah, no, that invoice looks good, go ahead and pay it. And the review's still happening. It's just, it's not being documented for the auditor to see. And that's a pretty common finding that comes about, is that we were not actually able to see that review. So being able to document that, super important. Just so we can get an understanding as an auditor of how that's truly working, to make sure it's operating properly. And then finally, it's just getting an understanding of how your entity expends those funds, right? Making sure that you're looking through the compliance supplement, making sure that you're aware of what's allowed and not allowed for the program, making sure that if maybe a program has specific requirements on language you need to have in contracts, or you need to do certain monitoring procedures on subrecipients, where you need to have a certain quarterly or annual report. You want to just make sure that you understand those requirements, so that when the time comes and you're kind of submitting those out throughout the year, you're not missing anything that might be important for, when the auditor comes in and starts taking a look, because they'll look at all the various compliance requirements. We look at all the ones that are going to be directed material to an entity, and if we see anything that might be missing or anything like that, we would kind of classify those as findings. So the more you're aware of what's out there and what could be missing, the easier it will be to prevent that finding, because you'll know to go back and make sure that you're actually filling out all that information. So there's a few ways to kind of get yourself prepared. It's there could be many findings from many different types of areas, but as long as you have a lot of eyes on things and kind of understand how they're supposed to work, it usually works out pretty well when it comes to the findings.
That's another great advice. And I think it really comes back to beginning with the end in mind and understanding, even if you don't have the full capacity to have segregation of duties, you have to find ways to document that multiple eyes looked at things and there was a process. So I think that's really, really solid advice. So knowing Kiwi County, It looks like it's going to have findings. So in general, what are you finding are the most common findings during a single audit?
And there's a few of them for sure that seem to pop up a lot throughout various single audits that I've done, and even a few that I wouldn't classify as common from my experience, but have been happening a lot recently that are good to highlight. The first one by far, probably the most common, is just missing approvals. Talked about it kind of a bit on the previous question, but it's there's always a lot of stuff going around in the single audit. There's the federal funds being used for plenty of activity, especially once you hit that $1 million threshold. So there's probably a lot of invoices involved for even a single program, a lot of money going around, and sometimes an invoice or a purchase order or whatever it might be can fall through the cracks and just approval is missing somewhere. That second set of eyes never got put on that piece. And it doesn't mean that it was the wrong cost and it shouldn't have been, part of that program. It's just a control didn't work in that case. It just didn't happen. And that review is just overall missing. That can happen on any sorts of things, from timesheets to reports to contracts, whatever it might be. Sometimes things just fall through the cracks. And that's probably one of the more common findings you might see, is just something not following through with the review. And on the same line as that, though, it's also going to be the formal documentation of that review too. Not only could the review just totally not occur, and that could be, its finding by itself, but it could also be that the review did occur between two people or three people or however many, but it just wasn't documented well. So maybe you didn't have that signed invoice, or it is just someone walking over to a desk and letting someone know, like, hey, no, that's good to go. Go ahead and send it out. That's all good. The review is happening, which is important, which is still very good. But on the auditor side, when we're looking through that support and we're making our determinations, finding out what we deem to be findings, going through our testing, if we're not able to see the true control happening throughout the process, that would result in a finding by itself. We can't just rely on the inquiry alone. We can't just rely on the process being the process and hoping that it's going through. We have to be able to see some sort of documentation that the process and controls are working and are actually being performed for the various samples that we end up selecting. So that's a very common one too, is just the documentation not fully being there to show that the review is happening, even if it might already be happening. Not as common, but still happens sometimes. I feel like for the most part, in my experience, most of the entities I work with are very comfortable knowing what expenditures are allowed and not allowed within the programs that we end up testing. But there are cases sometimes where, similar to the review, some things just fall through the cracks, where maybe you're going through the expenditures and we select a few and we go see one and it's related to something that probably in the compliance supplement based on that specific program shouldn't be allowed within there, but it's included within the CFO or being reported underneath that program. That would be a finding, and even what they call it a question cost as well, that we would have to kind of quantify and see what effect that would have on the CFO, like if it should actually be included or not. So one that's not as common, but it can definitely happen, and it's very easy, especially if you don't get the understanding of what's required and what's allowed and not allowed within a program. If you're just kind of doing the review but not having that background knowledge of what does the compliance supplement say is allowed or not allowed, that's where this would probably end up coming into play a lot. So another key one, and then more recently, which I feel like hasn't been super common for the most part, for the last couple I've seen a decent bit of, it's finding it's wording within contracts, either ones that you might procure through like an RFP or a bid, or even some with like subrecipient agreements. And there's many programs that require certain specific language within them that they say in the compliance supplement for a procured contract, you have to have X paragraph within the contract. For whatever reason they decided on the federal side. And when we go back and review those contracts, sometimes we'll of course read through, make sure it includes that information. And there's been a lot of times where it doesn't follow through, right? There's no information that's required that in the compliance moment says that it needs to be in the contract, and it's not actually in the contract itself. So it's an odd one that has kind of popped up recently. I feel like it hadn't been super common in the past, but I've seen it a decent bit recently, just making sure that all the language you need is in there. It's an easy one to miss, considering those contracts can get pretty long, but it is important to make sure that all the required wording and things like that are all included. So another one that could easily pop up and kind of sneak up on people when they go through an audit and not realize they're actually missing something. So I'd say those are probably some of the more common ones. They can kind of pop up at a random, right? It's very different for each entity where a finding might come up through, right? Because everyone kind of has their own different process and controls over the programs and various funding. So it can definitely differ, but at a more general sense, those are some more of the common findings you might see in an audit.
Zach, what I'm really hearing you say is underlying everything is have a strong internal control plan. Understand internal controls and make sure you have them in your organization. If you don't know about internal controls or don't understand them fully, just go Google COSO, Integrated Framework, and that should take you to somewhere on Google, the website, hopefully the COSO website, and you can read through that, and that'll give you some information on internal controls, and hopefully we'll do a podcast on those soon because they're my favorite thing to talk about. So now our poor Kiwi County has to address single audit findings. They had a few. So how does the organization create a corrective action plan? And how do you, as an auditor, determine if an organization's corrective action plan will actually be effective?
It's always different for someone who hasn't experienced a single audit before when they're first creating that corrective action plan. There's certain kind of required information within, which I'll kind of go over here in a bit. But the main thing to think about when you're looking at the corrective action plan is that the auditor can help you in kind of starting that template and creating what you need to have in the action plan. So a lot of times if you've never done one before and you're not really sure where to start, maybe you Googled a few things and just didn't come up with anything to start with, don't be afraid to reach out to the auditor. They probably have plenty of examples to kind of show you how to format it, what information is needed, how to fill it out, what's going to be required, things like that. So definitely do not be afraid to reach out. They can kind of assist you in that sense. But for the most part, the information that you need within the corrective action plan is usually just a description of what the finding was. It kind of talks through a little bit about what caused it, kind of what the root cause of that finding was, why it ended up coming about. The main thing is what's management's plan to make sure that it doesn't happen again. So usually this is probably the biggest part of the corrective action plan, and just talking through new processes that might be put in place by management, new controls that might be put in place to hopefully help alleviate that finding from ever occurring again, or at least being proactive in preventing that from happening again. And then finally, there's usually a bit of a section on it just talking about like the acceptance of the plan, auditor making sure that it's a reasonable plan, and things of that nature. So it has pretty standard information throughout. They might look a little bit different from entity to entity, but they usually all have the same information kind of required within there. So a good place to start always with the auditor, but I'm sure you could also find a ton of examples out there just looking around as well. But once that plan is actually created, management usually sends it over to us as an auditor, and we'll kind of look through and just make sure at a high level, at least at face level, that it makes sense. We can't really test it at this point because whatever control or process they talk about within there, not really implemented yet because it's pretty early phases. So we're not actually being able to test anything related to that just yet, but we can at least look at it and say, if whatever process management listed worked properly, worked 100% effectively, would this have stopped the finding from occurring? So it's kind of looking at the design of the control. And if we can at least reasonably say, hey, the missing piece was a missing approval on an invoice that they had missed, and it looks like none of the invoices were approved for a federal program, and their plan was to have the director of finance come in and start reviewing everything that the account invoice prepares, then we'd be able to go back and say, what, if we had that additional set of eyes, that would have alleviated our finding. We probably would have been good to go. There wouldn't have probably been a finding. So we kind of look at it at that level to start with, just to make sure that it would actually make sense, would actually work. And then after the audit's done, that's when we start doing a bit more true operating effectiveness work on the corrective action plan. So it depends on the auditor. Some people will come in at kind of at an interim time frame and maybe just check in on the action plan, make sure things are actually getting implemented like they said they were supposed to, maybe select a sample of a few to make sure things are actually working if we're looking at the documentation of it and everything like that. But I'd say for the most part, it usually happens a lot like the work over the corrective action plan on the next audit. So unfortunately, it kind of spans that whole entire time where you got to have to, implement the various controls, and you have much time to do so. And then when that next audit comes, the auditor will basically add on to not only just the regular programs they're going to be testing for that year, but they're also going to be going back and testing that corrective action plan now. So they're going to probably select a few samples to go through and just make sure that, hey, did this control actually get implemented? Is it working how it's supposed to? And with all those combined, did it stop the finding from happening? And if those three things, are checked off, then great. That means the corrective action plan worked, not seeing the findings anymore, and we're good to go. And if it doesn't, then that's cause for further discussion, trying to figure out what happened, where things went wrong. Was it the control? Was it just not implemented? Whatever it might be, kind of opens up some further discussion. So I will say with those corrective action plans, usually I'd say 95% of the time, it's going to add on technically more work to the next audit, because a lot of times firms are going to be, when they're coming in for that single audit, they're going to be doing their regular testing over programs like they would have in the previous year, but now they're also adding on that additional testing to make sure their corrective action plan is correct. So it definitely adds a bit of time going into next year, which is why I'm sure plenty of people want to try to avoid them. They're never fun to have in there. When you first see them going through, but it is a conversation with an auditor to kind of get through those, create a plan that will work for everyone, that everyone can kind of agree on, that would work to alleviate the findings and go from there. So it's not the worst thing in the world, right? There, you can always get over one, but it's definitely just about that communication, making sure it's actually being implemented afterwards and then testing it at the end.
Wow, Zach, that was an amazing, really great high-level overview of the single audit processes and what organizations can do to help stay away from those findings, right? So before we wrap up, what are your key takeaways from today?
I have three. If there's anything to remember from this podcast, there's three main takeaways that you really want to just hammer into your mind when you're going into a single audit. The first one is communication, just all sorts of communication between the auditors, your internal team, whoever might be involved in that process. Make sure everyone's on the same page when it comes to expectations, that the timing of the procedures, what sort of procedures might come into play, what are the deadlines, what are the due dates, what type of support is going to be requested. It's a lot of stuff to talk through, but the sooner you talk through that and the more you get an understanding on both sides, it's going to be way easier to get through a single audit than if no one is kind of prepared and on the same page. So getting through that audit work plan, setting something up so that everyone is held accountable is probably one of the easiest ways to make a single audit work smoothly, even if it's your first time, and ease a lot of that stress that comes with it. Number two, probably is going to be understanding that there's a lot of information that's going to be requested. I do it all the time. All the auditors do. We ask for a ton of stuff. It's just how, unfortunately, the game works. And being able to know where you hold your information for your federal programs, where that information is stored, will make it much easier for you all to access it once we start giving out our samples and things like that to start testing. So just knowing going into it that there is going to be a lot of questions, a lot of requests, a lot of support that's going to be needed, and kind of dedicating some time with the team to figure out, hey, what weeks are going to work best for us to provide this kind of stuff? How much time do we need to provide this kind of stuff? That all kind of you can communicate with the auditor and let them know ahead of time so that there's no delays in the process that are unexpected. So another key one. And then finally, and I didn't list these in priority by any means, but this probably is also a very important one, is review, review, review. The more level of review, the more eyes you have on any sort of document that relates to federal funds, the less likely you'll have to have a finding. And that's what everyone wants when they go through a single audit, is have no findings and just have a perfect single audit opinion, no issues at all. And to do that, you really need to have that review over all sorts of different documents that go into a federal program, from invoices to contracts to reimbursement requests, you name it, you want a review on it. So I'd say those are the top three for sure that will at least set you up well for a single audit going into it, and definitely some of my key takeaways from today.
Thank you, Zach. Hey, you guys, I have another brilliant idea. I know 2 in one day is unheard of, but I'm thinking we should do a part 2 to this single audit podcast and do something more in depth, like a comprehensive plunge. So let's call it a huge plunge with a big splash into the really more detailed things, more details about single audit compliance. Like, what do you think, Zach? I mean, would you be up for part 2? What do you think, Paula?
Of course. I mean, this only scratches the surface of what is in a single audit. So there is going to be plenty to talk about and make a huge splash in part 2. So I think that's a great idea.
Great idea. I agree. And I'll stick with the analogy. Let's quote unquote dive into the actual details of what a single audit encompasses to the entity being audited. There's a lot of information out there and guidance. 2 CFR 200 walks you through the compliance process, separation into groups A and B, and how you sample. I think we need more in-depth knowledge, so I'm excited. Zach, thank you for your insight on single audit strategies and best practices. And if you have other questions on the single audit, you can reach out to Zach at Zach dot LeMorta, LEMORTA, at cbh.com. So stay tuned for part 2, an auditor's insight, single audit compliance. Thank you to our audience for listening in today. And remember to subscribe to the series at www.cbh.com/cherry-Bekaert, Bekaert -podcast/. We look forward to hearing from you.